Good morning. Magna is poised to become North America's next nickel and copper producer and focused in the great jurisdiction of Sudbury. There will be some forward-looking statements, so be aware of that. So I think to start this story off in this presentation, really we need to understand why we are uniquely positioned. And it really has to do with Sudbury. And a lot of investors aren't familiar with Sudbury because it has really been dominated for over 100 years of mining by major mining companies. Originally Inco and Falconbridge, now Vale, Glencore, and KGHM. But it does have a very long history of mining, was one of the first nickel mining camps, and still produces a lot of nickel, copper, and precious metals. Because of the long life of these operations and the long history of mining, there's tremendous amount of infrastructure already in place. So this is a very well-established mining camp. It does have all the mining contractors, the service providers, the skilled labor, smelters, operating mills that are underutilized. So all of this leads to very low-cost exploration and development of new operations. But I think one of the things that really is important is because of the long life of this mining camp, there's true social license to operate. The people in the communities around Sudbury, they don't just accept mining, they embrace it, they promote it, and they really depend on it. So this is a real advantage and allows us to move things ahead very quickly, having such a supportive community, and this includes the First Nation communities as well, who understand the benefits that mining can provide. But the reason Sudbury is a mining center of Ontario is because of the mineral endowment, and we wouldn't be operating for over 125 years without having tremendous deposits, and there is still a lot of discovery to be made, and 9 of the 11 critical mineral mines in Ontario are in Sudbury. So this is a map showing the Sudbury region. This is the basin itself. It really is the rim of an old impact crater. The Sudbury deposit was formed about 1.85 billion years ago by a meteorite impact, and the majority of the mines sit along the edge of this crater. And there are different styles of mineralization. There's the contact mineralization on the crater, there's the offset dikes, and there's the footwall deposits. Magna's properties sit just on the edge of this basin, sort of in the southwest corner, as well as our Shakespeare project, which is just off the end of the basin, and that's a large land package, about 180 square kilometers. Again, in close proximity to the infrastructure you need to run and operate mines, which are existing mills and smelters. And Sudbury has the only 2 active nickel smelters in North America. Again, very strategic. So our strategy with Magna is really in 3 pillars. The first is near-term production, and that would be through our Crane Hill project, which is a fully permitted mine, and we just received permits, our final permit last week, our permit to dewater, and we plan on utilizing an agreement that we announced in March with Vale to sell ore to Vale's Clarabelle Mill. Now that we have these permits in place, we are just working to finalize our funding package, which will allow us to start bulk sampling test mining as early as Q3. The second strategy that's really going to grow our company is exploration, and we have a team of experienced Sudbury geologists that have made numerous discoveries in the Sudbury Basin, many of which have been put into production, and some are currently in development and producing. And we have a fully funded 25,000-meter drill program underway right now, 3 drills turning between our Crane Hill and Shakespeare projects, and we are focused on discovery. And then the third pillar of our growth strategy is on acquiring new properties, non-core assets in the basin that are held by majors, much like our acquisition of Crane Hill. And we believe that this is a true way to become a mid-tier producer in Sudbury, and there's a lot of opportunity for those types of non-core assets to be put back into production by a junior like Magna. So this is an overview of just a picture of the Crane Hill Mine. As you can see, road passes right through the property, and it is a brownfield site with good access to power, a water treatment plant run by Vale, and has ore that comes, or mineralization that comes right to surface. So the Crane Hill Mine is our focus right now. Crane Hill is a past-producing Inco mine, operated on and off for about 80 years, producing 20 million tons of ore that was processed through Inco's mill. It is a fully permitted, as I mentioned, which is a huge accomplishment. We've only acquired this property 17 months ago. We've taken that from acquisition through the permitting process, and 17 months is, truly speaks to the jurisdiction and the team that we have here at Magna. We did come out with an initial mineral resource estimate back in November of 2022, shortly after acquiring it. This mineral resource estimate took into account all the historic drilling prior to Magna acquiring it, and it's quite significant. So our current resource estimate is 16.8 million tons at just over 1% nickel equivalent, as well as 14.5 million tons of underground mineral resource, and at just over 2% nickel equivalent. So great grades, large resources, a lot of pounds of metal in the ground, and both of those are in the indicated category. We did complete a PEA in July of 2023, and this PEA really set out to try and understand how much of this large resource could be potentially mined. It did demonstrate a relatively low capital cost to get the mine up and running, with $48 million for advanced exploration and an additional $81 million for pre-production capital, outlining a 15-year mine life and potentially 20 million tons that could be mined from that deposit. We are also underway, as I mentioned, with exploration, and we have a very exciting exploration program planned this year, focusing on footwall discoveries. So this is just a long section showing the mine and some of the areas that we highlight here, the 101, the 105, and the 109 footwall areas are areas we'll be targeting, not just with exploration, but with some of our early mining that we look to get started with later this year. But to explain what a footwall deposit is, because it's so important to our strategy and our story, I'm going to jump into a short video.
We have been mining nickel, copper, and precious metals in the Sudbury area for over 125 years. Though these metals have always been present within the earth, a significant event caused these metals to accumulate and form the deposits in Sudbury. 1.85 billion years ago, a large meteorite crashed into the Earth's surface, and the impact had significant geological effects, creating what we know today as the Sudbury Impact Structure. The Sudbury Igneous Complex, SIC, a component of the Sudbury Impact Structure, consists of the main mass norites, quartz diorite offset dikes, and Sudbury breccia units in the surrounding footwall rocks. At Crane Hill, it is within the footwall rocks of the impact structure that Magna Mining is focusing its current exploration efforts. Historically, mining has focused on the contact nickel deposits at the base of the Sudbury Igneous Complex. More recently, the 109 footwall zone was discovered and is an example of a copper and precious metal-rich deposit hosted in Sudbury breccia within the footwall of the main contact ore body. These Sudbury breccia units can extend for several kilometers into the footwall rocks and can form pathways for significant mineralization to move out into the footwall environment. Because historical exploration in Sudbury has focused on the contact deposits, the footwall environments remain relatively underexplored. With continued exploration, there is high potential to discover new world-class copper-nickel and precious metal deposits in the footwall of the Sudbury Igneous Complex.
So that's a lot easier than me trying to explain what a footwall deposit is, but it gives you a sense of what we're looking to do. And these are the types of deposits that really haven't been well understood up until about 30 years ago, and relatively new for the Sudbury story. So right now we are focusing on drilling some deep holes in an area of our footwall which we believe has all the right geological ingredients to have one of these footwall deposits. And based on what we're seeing closer to surface in the 109 footwall, we are seeing elevated copper, elevated PGM zones, where we're getting intersections of 4 to 5 meters with 11% copper, 3% nickel, and the precious metals in the teens. So we will continue exploring these areas, but it's another attribute that we have that could be a significant catalyst in the growth of our company. So pathway near-term production, our permits are in place. We have an ore selling agreement with Vale. We have a contractor already selected, and we're in final negotiations with them. We are looking to update our mine plan and looking at funding options such as a precious metal royalty or stream on one of our precious metal byproducts as a possible funding mechanism for what we estimate could be, based on our PEA, 40 to 50 million Canadian. Our Shakespeare project, I'll just touch on it quickly. It is, again, a fully permitted, past-producing nickel-copper PGM mine, just located west of our Crean Hill project. Shakespeare produced through toll milling, so it was an open pit. Chipped ore to one of the existing mills in Sudbury. It's on care and maintenance currently, but it does have all the permits in place for a 4,500 ton per day open pit mine mill and tailing storage facility. We do think that it has potential in the future, if we build this mill, to create a hub and spoke production model in Sudbury. And that gives us a lot of leverage and allows us to negotiate with the mills in Sudbury. If we do not get the terms that we think are reasonable, we can build our own mill and process Crean Hill and Shakespeare ores through our own mill, as well as potentially other mills or other deposits that we acquire or discover in the future. The hub and spoke production model, I think most people are pretty familiar with it, but really taking Shakespeare open pit mine, the Crean Hill underground, and then blending those together into a future mill producing nickel and copper concentrates. So near-term catalysts, we do expect to be giving more guidance and announcements on starting of test mining and advanced exploration at Crean Hill, which will start with a 20,000 ton bulk sample at the end of this quarter or early Q3. As well as more guidance and on our plan of what that advanced exploration will look like and initial mining. We will be continuing to drill throughout this year with 3 drills currently turning, so there's going to be a lot of assays pending that will be announced as we get them. And then strategic acquisitions, although you can never guarantee, we are quite optimistic that within the next 12 months we'll be able to announce another acquisition of a non-core asset like Crean Hill in the Sudbury Basin. So Magna is a very uniquely positioned junior company with world-class exploration potential, advanced assets, technically de-risked, and a great team operating in a great jurisdiction. Thank you.
Amazing. We do have time, I believe, for a quick question, if anyone has one. Yes.
Your Vale ore purchase agreement, what's the basic scopes of that? How much of the metal do you actually get out of that?
So the basics of the agreement are that there's a milling cost, a processing cost. We drop off the ore basically at their mill, and they own it after that, so they control the metal. We pay treatment and refining costs. But there is based on the test work that we did at a third-party mill, which was managed both by Vale and by Magna, we developed recovery curves. So based on the grade of the metals that we're shipping to them, we get defined payables from that. So it's a very, in my experience and our expectation, is very favorable terms, much better than we would have expected. But it's based on having very good recovery based on the test work that was done.
You guys sell concentrate from the Shakespeare hub and spoke mill. I guess you've got very competitive environments. That really don't know much of the fuel on there.
Definitely, it's always favorable to have local sources of concentrate for your smelters. So obviously having 2 smelters there, one of them will be the likely buyer of that concentrate, but we do have the optionality to ship it wherever it makes the most sense.
Perfect. Thank you.
Thank you.